What if you got sued today for something that happened 3 years ago, and your new insurance says, "Sorry, not our problem. We were not your insurer when it happened." In the world of claims-made policies, it's not just about when a claim is made. It's also about whether your policy reaches back in time to cover your past work. That's where prior acts coverage or knows coverage comes in. It lets your new policy protect you from old exposures. Welcome to Insurance World TV, where we make insurance simple, relevant, and practical. Let's unpack how prior acts coverage can save your business from nasty surprises. Question 1. What is prior acts or knows coverage? Prior acts coverage, also known as knows coverage, is a feature in a claims-made insurance policy that provides protection for claims arising from events that happened before the policy's start date, as long as those events occurred after the retroactive date specified in the policy. If you switch insurance companies in 2025 but purchase prior acts coverage with a retroactive date of 2018, you'll be covered for claims made in 2025 for incidents that happened anytime between 2018 and 2025. Key point: it ensures continuous protection when changing insurers, so you're not left exposed for past work just because you started a new policy. So, why is it called knows coverage? Think of it like this. Your new insurance policy has a nose that reaches back into the past to sniff out any claims from earlier work. Even though the policy starts today, it protects you for things you did years ago, as long as they happened after a set date, called the retroactive date. It's like your new policy is poking its nose into your past and saying, "Don't worry, I've got you covered." Question 2. How does it work? Let's break it down. Imagine this. You're a doctor, a lawyer, an architect, or any professional who relies on professional liability insurance. You've been insured by insurance company A under a claims-made policy from 2018 to 2024. That means you're only covered if a claim is both made and reported while the policy is active. Now, in 2025, you decide to switch insurers, maybe for better rates or better coverage, and you take up a new claims-made policy with insurance company B. Then suddenly, boom! In 2025, you get hit with a claim, but it's about something you did in 2023 while you were still with insurance company A. Here's the catch. Claims-made policies don't just care when the incident happened. They care when the claim is made. So if you don't have prior acts coverage, here's what happens. Insurance company A says, "Sorry, your policy ended in 2024. Claim came too late." Insurance company B says, "Sorry, the incident happened before our coverage began." You're stuck, unprotected, and probably liable. Now, here's where prior acts coverage, also called knows coverage, becomes a lifesaver. When you buy your new policy with insurance company B, you request prior acts coverage with a retroactive date set back to 2018, the original date your coverage began. So now, insurance company B agrees to cover claims made today for incidents that happened anytime between 2018 and now, even though they weren't your insurer back then. That way, your new policy picks up where your old one left off, with no dangerous gaps in protection. Bottom line, without prior acts coverage, switching insurers could leave your past work completely exposed. With it, you keep your safety net and your peace of mind. Real-life example. Meet Dr. Amina, a respected pediatrician in Nairobi. She had a claims-made medical malpractice policy with insurer A from 2018 to 2024. In 2025, she moves to a new hospital and switches to insurer B, but forgets to include prior acts coverage in her new policy. Then, months later, a parent files a lawsuit. It turns out, back in 2023, Dr. Amina misdiagnosed a child's condition, and now the family is seeking damages. Here's the shocker. Insurer A says, "Sorry, your policy ended in 2024. We can't help." Insurer B says, "Sorry, the incident happened before our coverage began." Dr. Amina is now personally liable, even though she was fully insured at the time of the treatment. If she had added prior acts coverage to her new policy, with a retroactive date going back to 2018, insurer B would have covered the claim. Moral of the story? When you switch insurers, don't leave your past unprotected. Always ask for prior acts coverage. Question 3. Where is prior acts or nose coverage commonly used? This special type of protection shows up most often in industries where claims don't arise immediately after an incident. Instead, issues can surface months or even years later, long after the work was done. Let's look at some real-world settings. Policy number 1. Medical malpractice insurance. Doctors, surgeons, dentists, even nurses, and clinical officers. A misdiagnosis or surgical error today might not result in a claim until years later, when a patient starts showing symptoms or seeks legal action. So when a doctor changes hospitals or insurers, prior acts coverage ensures past patients won't become future lawsuits without protection. Policy number 2. Legal malpractice insurance. Lawyers often work on cases that have long timelines, contracts, estates, criminal defense. Imagine switching insurers and a former client files a claim over advice you gave 4 years ago. With nose coverage, you're still protected, even though the issue happened under your old insurer. Policy number 3. Professional liability / errors and omissions, E&O. Used by accountants, architects, engineers, consultants, IT firms, and more. Any professional service that carries a risk of negligence or oversight can benefit. Claims may not come immediately, but if they do, you'll want your new insurer to cover the past. Policy number 4. Real estate and financial advisors. Giving bad investment advice? Mishandling a real estate transaction? You might not hear about it for years, but you'll definitely hear from a lawyer. Prior acts coverage ensures that even if you've moved on or changed firms, your past work is still insured. In short, if you're in a claims-made environment where your work carries long-tail liability, meaning claims can show up long after the work is done, prior acts coverage isn't just helpful. It's essential. Don't just protect where you're going. Protect where you've been. Question 4. What are the benefits of prior acts coverage? Here are some of the benefits, because in the world of claims-made policies, protecting your past is just as important as covering your future. Benefit number 1. Continuous protection. When you switch insurers, prior acts coverage ensures you're not left exposed for work you did years ago, so no coverage gaps. Benefit number 2. Peace of mind. It eliminates the fear of surprise lawsuits for past services long after your previous policy ended. Benefit number 3. Financial security. Without it, You might pay out of pocket for legal costs or settlements on old claims, even if you were originally insured when the work was done. Benefit number 4, professional credibility. Clients and employers trust professionals who manage their risks responsibly. Nose coverage is part of that trust. Bottom line, prior acts coverage helps you protect your reputation, your finances, and your future by covering your past. Question 5. Are there any drawbacks to prior acts coverage? The answer is yes, and here's what you need to know. Drawback number 1, it's not automatic. Just because you get a new claims-made policy doesn't mean prior acts coverage is included. You must request it, and insurers can decline based on your history or risk profile. Drawback number 2, it can be expensive. The more years you want covered in the past, the higher the premium. Extending coverage way back can significantly increase your policy cost. Drawback number 3, retroactive date limits. Even with nose coverage, you're only protected for acts that occurred after the retroactive date. Anything before that, still not covered. Drawback number 4, claims still must be reported promptly. Even if the incident happened years ago, the claim must still be reported during the new policy period, or it may be denied. Bottom line, prior acts coverage is powerful, but it's not perfect. You need to understand the fine print and weigh the cost against your risk. In conclusion, prior acts or nose coverage is more than just insurance jargon. It's a critical safety net that protects you from claims related to past work, even after you switch insurers. In a claims-made policy world, it's not just about what happens today. It's about making sure your history is protected just as much as your future. Whether you're a doctor, lawyer, consultant, or business owner, if your work carries long-term liability, don't drop the ball when switching policies. Talk to your insurer. Know your retroactive date. And never assume you're covered until it's in writing. Thanks for watching Insurance World TV, where we make insurance simple, relevant, and practical. Don't forget to like, subscribe, and share this video with someone who needs to hear it. And remember, always protect your past so your future stays secure.